Hey everyone, in this video I want to show you how I use a compound interest calculator to help motivate me for my savings goals. So, a lot of the times if I come into, let's say, a raise or I come into some extra money or I'm thinking about a different life situation, I might be curious as to how that might impact my ability to retire or how much I'm going to be saving. So it can be kind of fun and motivating, like I said, to actually see what that outcome could be. Even if it's something as simple as saying, hey, I'm going to save an extra $40 a month and put that into the stock market. When you're able to see what that turns into over 30 or 40 years, that can really change your perspective on if you need that coffee every day and a lot of those other trade-offs you might be able to make. So I'm going to start out, I'm going to show you the compound interest calculator that I like to use. There are a lot of them out there. If you Google them, you can certainly find different ones, but the one I like to use is with a company called Bankrate. So I'm just from Google going to just go ahead and show you that if I search Bankrate compound interest calculator, it's actually one of the ones that's going to pop up because I go there a lot. And I'm showing this on the desktop or my laptop computer, but you can check this on your phone as well. So I'm going to go ahead and click into this compound interest calculator, again, bankrate.com. Okay, and when this loads up, it's going to show you some different inputs that you can put into this thing. So it's going to say, okay, like how much do you currently have saved, if anything? You can put that to 0. How many years are you planning on saving for? What rate of return do you expect to get? And now the rate of return can be an interesting one to play around with because, certainly there's no guarantee that additional study in the stock market is going to lead to outperformance. But, it can be motivating when you see what the impact can be on your savings if you were able to achieve, let's say, a 12% rate of return versus a 10%. So if it's a matter of reviewing your investments every quarter, really doing your due diligence, if you're able to squeeze out an extra 2%, you can kind of see what that impact would be. So let's for fun, let's just say we're starting out with $0. Let me get 0 in here. And, again, let's say you're in a situation where you have the ability to save for the next 40 years, and we'll be conservative. We'll say that you're able to earn about 9% for those 40 years, which is about in line with what the stock market has yielded on average per year. And understanding that some years historically have been better, some years have certainly been worse, but on average, the stock market has averaged about a 9% rate of return. At least in nominal terms, not in real terms when you take into account inflation. And again, let's say, so if you were investing an extra $10 a week, which would be $520 a year, and you can have your frequency here down here is per year, you can come over here and hit calculate and say that if you were able to put $10 a week away for 40 years consistently, if you were able to do that, by the end of those 40 years, that $10 a week is actually going to be worth about $191,000. Which again, when you think about like $10 a week, that doesn't sound that significant. And in 40 years, I think that you're going to be much happier having that $190,000 than you would have had the trade-off on whatever that $10 a week could have been providing for you. Now, again, that's 9% going to be $191,000. What if, again, your additional research was able to help you get to a 12%? What does that get you incrementally? Well, that takes you from 190,000 to 446,000. So it's a pretty big bump, certainly a big increase. And again, no guarantees, but how would you be able to achieve a 12% return? Perhaps it's that extra little bit of study every quarter, reviewing your investments, really doing that due diligence. It's going to help you get over the hump. Now, what's really crazy to think about, again, this is just $10 a week again. And, it's funny because Bankrate will actually only allow you to assume that the highest return you're able to get is up to 20%. They won't let you go any higher. Warren Buffett, I believe, he was actually averaging around 22% for his whole life of investing, which of course is why he's worth billions. But you want to see how powerful this rate you're able to achieve is. Let's for fun bump that up to 20%. So again, we said 9%, it's about 190. 12% would say you'd be able to have about 446. Let's see what would happen if you bump this up to 20%. We calculate. Then all of a sudden, if you're able to earn 20% a year on average, that would all of a sudden be worth $4.5 million a year. Now, again, I'm not saying, of course, that Warren Buffett was certainly an exceptional investor. I don't think that that's something that's realistically achievable for everybody in the stock market, but it does really, like I said, the fact that 9% over this time period is that 190, 20% is 4.5 million. That really goes to show that if you're able to, find ways through study, whatever you can do to be able to get that better return, it's going to have a dramatic impact on your life. So, for me, it's fun for me to play around with some of these numbers. I'll think about with myself. I'm like, okay, if I wanted to save, like if my goal, for example, was to say that I wanted to have $500,000 and I would be able to expect to earn about a 10% return. And let's say that I'd be able to live off of, $50,000 a year, which would be that 10% of the 500,000. So if I ask the question, how long is it going to take me to get the $500,000 that's going to allow me to essentially live off of passive income from my investments? Well, I can start playing around with some of those numbers. And again, I can say, well, okay, let's say again that I only have that 9% assumption that I'm going to earn in my return. And let's say that I'm like really saving a lot. I'm able to put away $2,000 a month. I'm committed to my savings goals. So let's say I'm saving $24,000 a year. Okay, well, we can see that certainly by year 40, if I was able to do that, even at the 9% return, I'd be worth just under $9 million. But when do we get to the $500,000 mark? Let's go over here. It looks like we would be able to achieve that by about year 12. Okay, so if that was my goal, to say, hey, if I can save $2,000 a month for 12 years, get a standard return in the stock market, in 12 years, I would be able to have enough money set aside where my passive income would completely be able to allow me to take care of my lifestyle, which at that point you're financially independent, which, certainly feels great. And again, I think financial independence, has really evolved where, I think once upon a time, a lot of people thought about financial independence, as an opportunity to not work. And I think a lot of people, have kind of come out and gone that route and have been very vocal saying that, hey, the real benefit of financial independence is not saying that you don't do any work. It's saying that you get to do the work that actually speaks to you, or do the work that you're engaged in. So again, this is just a good calculator I like to use. I like to think about this in terms of incremental money I want to have. If I think about goals I want to have, or if I think about, hey, again, if I want the $500,000, sooner, and I think about, well, what if I could earn my 12% return, right? So instead of 12 years, I could probably do that $500,000 in maybe about 10 or 11 years just by changing the interest rate. Or again, I could start to think about, well, what if I was able to save $30,000 a year, right? Again, same kind of thing. And then what that brings us to about year 9, I'd be able to have pretty close to that $500,000. So something I enjoy using, something that I actually check quite a bit. I think it's just good motivation. Wanted to share this tool. Anyway, I would love to know you guys' thoughts, and if this is something that'd be able to help you, or if you're currently using tools like this to help motivate you, go ahead and let me know in the comments below. Thanks for watching.